seeing a lot of signs, sort of episodic, anecdotal, of frothiness. You've got house prices going up. You've got cryptocurrencies going up. You've got lots of movement in and out of stocks. Are you concerned that stocks are ahead of themselves?
Well, I think it's a valid point, Tyler.
Mark?
I mean, you mentioned all those things that are indicative of what you would typically see in periods of time in which the market's gotten a bit frothy, a bit speculative. You're bringing in fringe players to take advantage of sort of the last mile. These are the kinds of things that you see closer to market tops and certainly the early stages of a bull market. Having said that, I also think there's some merit in certain of the areas that you mentioned. Granted, thematic investing has become a bit of a poster child of what could potentially go wrong in the marketplace. However, if one takes a healthier view of how to utilize these funds as more of a core and satellite approach, where some of the broader index funds can serve as the core and having some of these thematic funds serve as the satellite, recognizing the potential volatility, but also treating them as if they're almost venture capital investments, then I think some of these themes really have secular tailwinds that can help to lead to good, if not outstanding, long-term results if you don't get shaken out in the meantime due to some of the inherent volatility associated with them because of the narrowness of the way in which they're really by design forced to invest.
You know, Mark, I have to say, no one should listen to me for investment advice. I listen to you and listen to Ron, but I intrinsically agree with you, and I'll get Ron's reaction to this, that if you use an index fund as your core and then you have some satellite exposure with other monies, that's a good way to go. Ron, let's talk a little bit about margin. There are signs that margin is up. Obviously, pros use margin, but amateurs are using margin too. It can bite you.
Yeah, and Tyler, I've always been opposed to individuals, making that gamble, whether they're doing it with options and futures contracts, whether they're doing it with individual stocks, and the margins vary from one type of vehicle to the next. I mean, look, this is a perfect environment in which the market, broadly speaking, is up. The meme stocks are on a tear. This is the best time in the world to eliminate your margin debt if you're playing that game and put that strategy away and enjoy and lock in your profits, rebalance your portfolio, do the types of pruning that makes sense if you're up a lot. I mean, and as you said, we've all been doing this a long time, and you and I have a shared institutional memory of not just the internet era, but before. This can go on for a couple of years, and everybody could look right. They'll look right until they're wrong. And that period in which they're going to be wrong is when the Fed changes interest rate policy, and then the day of reckoning comes. So I'd be cleaning up my portfolio at this point rather than trying to continue to play the hero or be an ape or whatever they're calling themselves on the Wall Street Bets subreddit. All that stuff to me is still a bit crazy.
Shepard Smith here. Thanks for watching CNBC on YouTube.